guest because I want to bring him on right now.
Sure.
So Scott Bauer is our guest right now. He is the CEO of Prosper Trading Academy, a longtime market veteran at CBOE and the CME. And Scott, can you hear me?
Hey guys, how are you? Good morning.
Good morning. How are you?
Good.
Before we get into this, Spencer, real quick, were you ever at the Merck?
I traded there for 1 year. I traded in the S&P 500 option pit for 1 year.
And that year was, well, you look a little younger than me.
No, I'm definitely not younger than you, I'll bet.
Yeah, you are. Everyone that comes on this show is younger than
I don't know if we've ever had a guest older than Joe,
I don't
Joe
think
on the
so
show.
either. I don't think so either.
So I'll tell you the 1 year. You guess. What year do you think I was there?
You look familiar. I think it was between 85 and 92.
No. Now you're dating yourself.
He's not that old. Now he's insulted.
So I hit the floor at the CBOE in 1991, but the 1 year I traded at the Merck was during the financial crisis when the Treasury first announced the first bailout. So I was in the pit when they announced the bailout the day before expiration.
Oh, wow.
Saw S&Ps rally, 80 points on that news. And in my, almost 30 years of trading, I've never seen the whites of traders' eyes like I did after that announcement. It was absolutely insane. Absolutely.
Who were some of the order fillers? So so it was a little bit later, right, that you were there? Do you remember any of the order fillers that were there?
At the Merck?
Yeah.
DJO was his acronym. And then the big guy from XFA, who's still there. I'm not going to name his name.
Okay.
If you were there, you would know him. I could tell you pretty much everybody from the CBOE, but my 1 year at the CME was, like a flash in the pan.
In what years were you at the CBO?
91 until, pretty much current time.
How about Larry Mertz or John Schuler? Do you know any of those guys? They traded.
What were their acronyms? You know from being a trader, a lot of people don't know other people's names, but they know their acronyms.
Shu was SHOO and Larry Mertz, I think, was MTZ. There you go. Okay.
There's my CBO badge.
All right, Spencer wants to talk markets.
I have a question, Scott. I was looking through your bio here. It said that you were the only market maker on the CBOE to trade Amazon options in 97. Is that true?
100% true. Not only on the CBOE, but in the world. Because at the time, options were not multiply listed. So if a stock was listed at the CBOE, it was not in New York or Philly or in San Francisco, vice versa. Amazon got listed on the CBOE, and there's a great story behind it, but it is 100% fact. For about 3 months, I was the only market maker on the floor to trade it.
Wow. Those days are long gone.
Yeah, that's a lifetime ago.
That's interesting. All right, I want to get to this chart that you sent us. You were kind enough to send over a chart of the 10-year Treasury. I'm going to bring it up here. Why don't you show us what we're looking at?
Sure. So I love trading TLT, which is the 20-year ETF. But if you match that up to this chart here of the 10-year, the TNX here, you can see just an incredible, obviously an inverse relationship here going back 6-9 months. And we have in my classroom and for my students here, we've made 4 significant trades over the last, 4 to 5 months based on support and resistance and the range that the 10-year has traded in, basically from, the 150-ish up to 190. And we've played TLT off of that. And they have worked to perfection. So I know you actually in the previous segment, you just talked about a little bit of a rally in TLT today. And I look over here and it's trading, 141-ish or so.
Yep.
So, what I would do is, okay, I'm going to look to see where does that correlate to the 10-year to see if I want to put a position on in TLT. And we've played it both ways in TLT based on where the 10-year has been. So we've been really bullish in TLT, when rates have gone up, and we've been really bearish when rates have gone down, and it's just worked out really well. So there's a pretty nice direct correlation there between the 20-year, the TLT, and how the 10-year is trading.
That's interesting because we talk a lot about relationships on this show, but that's not one that we've discussed. So this is really good because we don't often talk about we talk about TLT as it relates to maybe like the bank stocks, right? Bank
Of
of America,
course.
but
Yeah.
not TNX. So this is super interesting here. So tell us a little bit about what you're seeing in the market here, Scott, as far as just sentiment or feeling. I mean, how are you feeling?
So
How,
from the retail perspective, the
yeah.
sentiment is overly bullish, incredibly bullish, and you see people just saying, "Oh man, I wish I would have gotten in 200 points ago, 300 points ago, 1,000 points ago in the Dow, this, that, and the other," and they're feeling that FOMO right now. From the professional, from the trader on the floor, and the guys that I'm talking to every day on the floor, both still at the CBOE and in the CME, they can't believe where volatility is, and they're waiting for kind of the bubble to burst here a little bit, not looking for necessarily, a big 10% sell-off or anything, but just an event that's going to make volatility pop here because, man, oh man, with all of the market risks that we have, inflated levels, geopolitical risks, U.S., China, you never know what's going to go on with the impeachment, trial. To see VIX trading at a 12 handle is just ridiculous.
I mean, you look at it down here, and whenever we get down to the 11, 12 handle, it seems like there's an event or something that will eventually pull us out. Is this just the time to buy insurance if you're long because the VIX is so cheap?
That's what I tell everybody when I go on the networks and just speak to my students. Even if you're not looking for necessarily a pullback, if you're not playing for a pullback, if you have stayed long in this marketplace in your retirement, whatever it is, not necessarily your day-to-day trading accounts, but your investment accounts, we always look for bargains, right? When you call up your insurance agent and you want a new deal on your car insurance, your home insurance, whatever it is, you always want a bargain. Insurance is at a bargain right now, and there is no reason not to lock in some of those gains, or at least have that position where if you do get a sell-off, okay, you're going to win a little bit here. I mean, this is, to me, it's ridiculous how cheap it is.
What do you think the catalyst could be to, and obviously we can never just guess on catalysts. I mean, it could be a trade deal, it could be anything, but, I look at this and I think, well, seasonality's coming in, usually December's a stronger month.
Yep.
We've obviously got, the Santa Claus rally at the end of the year that usually comes in. I mean, this is setting up and maybe this is why all the ducks in a row and insurance is so cheap, because I'm struggling to really find the catalyst that's going to sell us off, even when, we have, the China deal, which looks like, maybe there's one coming here. I mean, now we've had, okay, well, there's no deal. I mean, even the volatility off that is muted now.
Unreal.
What do you potentially think could be the catalyst to knock this market down?
So let me just state first that I'm a glass half full person. I am typically very bullish. I am typically very optimistic. However, I do think that regardless of what happens with the U.S.-China talks with this phase one, if they actually sign a deal, I think we sell off. If deal falls apart, talks break down, I think we sell off. I think this is the perfect setup for the buy the rumor, sell the news type of event here. And to position yourselves, and I am not advocating getting short this market. I'm not advocating getting out of longs. I am advocating buying protection because it's so cheap. And to me, I love kind of the anti-look at this, that buy the rumor, sell the news, and I think you got to take advantage of it.
What specific stocks, and let's just say, you don't have to give us names here, but just talk sectors here. What do you like and what do you not like going to the final month of the year?
I don't like energy at all. I think that it's just been, we've looked at oil prices. You look at nat gas, and even though nat gas has been so volatile, it's still been range bound. Same with the oil specter, right? We've had that incredible range. So I think that's pretty muted here. I do like the financials here. They have weathered such a storm through the whole rate debacle. I really do like them. And even though Powell, again, came out yesterday and said, inflation's going to be muted at that 2% target, we're not changing rates anytime soon. You look at the big guys, the JPs, the Goldmans of the world, and even though they've really outperformed over the last month or so, I still like those. I'm a little hesitant on retail. We've seen some good reports. We've seen some really bad reports. I'm a little hesitant overall in the space, though. If I had to pick one stock in retail, and you guys just talked about it on the last segment, it would be Amazon, because, regardless of the overall landscape, I think they're going to do really well.
Because they're everywhere in everything and in everyone's business and everyone's pockets. Scott, before we let you go here, I want to give you a chance to just talk about Prosper Trading Academy and what you do and sort of what kind of education you stress to your students.
Thanks. So I've taken my 20 plus years of actual floor trading experience and brought it on to trading on the screens, which most of us do here. And as a little bit of a backstory, I used to actually teach at the CBOE. I taught options for people that would come in. I taught at the OCC. So I've taken that teaching experience that I have along with my actual floor trading experience and brought it into a live online classroom. So myself and a few other instructors, we have live during market hours trading classrooms where we trade along our students. We discuss not only the markets, but we go through the education of what's behind a certain position, not just options, but stocks as well. We look for earnings plays. We look for volatility. We look for momentum, swing plays. And we are as much about the education here and teaching people the fundamentals so they can wind up making their own decisions as we are about the trading.
Before we let you go, you got a good floor story for us? Maybe something that shaped your trading career. It could be a good one, could be a bad one.
Safe for work floor story. Let's preface that. Something that we can,
Something we can have a little bit on the G-rated or at least PG-rated.
Yeah.
Oh, something I can share with the family.
I don't know,
Disney rated.
Someone swore on the show the other day.
Yeah, besides the Amazon one, which was just an incredible journey, because the day that I walked over to trade in that pit, there was an announcement over the loudspeaker. It was July. It was the middle of the summer. And I was literally, honest to God, laying in my current trading pit, which was the Coca-Cola pit, doing a crossword puzzle. There was an announcement over the loudspeaker, market makers to Amazon. Nobody went over. I didn't go over. 5 minutes later, another announcement. I said, all right, fine. I walked over. So I literally started making markets just, by my head. I had no theoretical sheets. Back in those days, we had no handheld computers. So I just started making markets. And as anybody knows, yes, there's volatility, which determines the marketplace, but really everything is based off of supply and demand, right? Volatility increases, due to supply and demand, and decreases due to supply and demand. So, the experience that I had really allowed me to start doing that. And I'll never forget that one of the biggest orders I've personally ever taken down in the trading pit, they were February 70 puts in Amazon. A broker came in from Pershing back at the time, John Hafner. I don't know if you remember John Hafner or not. Anyway, he had 1,000 puts to buy. Okay. I am the only trader out there. So back in those days, you couldn't short Amazon. You couldn't, so if I'm selling stock or if I'm selling puts and I want to sell stock as my hedge, you can't do it because it's going to get called right in. He had 1,000 puts to buy. He asked the market. I give him the market. He says, I'll buy 1,000. I said, I'll sell you 10 because we were upheld by the law, literally, to uphold our markets up there for 10 contracts. He said, all right, what's the market coming out? Gave him the new market coming out. He said, all right, I'll buy 990. I said, I'll sell you 10 more. And it was literally just a matter of supply and demand. Finally got to that point where I wound up selling him 1,000 puts in Amazon. And here I am. I am literally the only trader in there. And I'll never forget at the time my partner's saying, what the heck are you doing? And I say, listen, I'm trading around it here. I got it. By the end of the day, with Amazon pretty much unchanged and volatility had gotten crushed, that broker came back to sell them all back out to me. You can pretty much figure out the rest of the story here.
Wow.
And another real quick one. I used to trade yearly when I was in the Coca-Cola pit directly against Warren Buffett.
That's great.
Yeah.
Oh, man. That's awesome.
Did you make money off Warren?
I made a lot of money off of Warren, and I'm sure he did as well. But remember, it's not a zero-sum game trading options. So.
Yeah. All right, Scott Bauer,
Great stories.
he's the CEO of Prosper Trading Academy. Scott, thanks so much for the time today, and have a great holiday.
You as well.